Hi, good morning, everyone. Good morning, audience of Technoviti 2021. So as we all know, this is the biggest technology, fintech, financial services event for the India as well as for the countries who participate in it. So it's a great opportunity for us to be here. And in this panel, which is the first panel of the day, we have very powerful, Powerpack panel here with eminent panelists across the world. And it couldn't have been better to start the panel talking about the investments, fundraise, fueling the innovation, growth in the Indian fintech ecosystem. So what I will do is that maybe we have total 45 minutes. We do have a lot of questions to ask the panelists here because they come from very diverse background. But probably we'll take about 10-15 seconds each panelist to give them opportunity to talk about what exactly they are doing, where they are located, etc., so that audiences gets familiar with them, and then we get into the panel discussion from there on, right? So with this, David, requesting you to quickly introduce yourself to the audience.
Right, thank you. I'm David Gyori. I am founding member of the World Fintech Association. I am CEO of Banking Reports London, and my primary activity is to train bankers all over the world about digital banking, innovation, financial technology. And I am looking forward to our conversation, some very important topics.
Great, David. Thank you so much. With this, Amitansh, requesting you to have a quick introduction to the audience.
Sure, Sachin. Thank you so much. So my name is Amitansh, and I'm Director of Insurance and Partner Services for Cover Genius, which is an Australian insurtech. We are expanding aggressively in India and Southeast Asia as an ecosystem. We have already secured multiple partnerships. Excited to be in this panel from a point of view of getting some groundwork reality of what's happening across insurtech and fintech space. So really excited to bring some of those perspectives on the call and happy to collaborate further.
Great. So we already had a UK representation. We have Australia representation as well. So Anand, from you, a couple of words about yourself and what you have been doing in your company.
Thanks, Sachin. Yeah, I work with the investment team of Nexus Venture Partners. We are an early stage VC fund out of India and in US. We very keen interest into the fintech system because of having worked in various positions in various fintech companies earlier. Look forward to the discussion. Yeah.
Great. Anuradha, requesting you to quickly introduce yourself.
Thank you, Sachin, and thank you for the opportunity to be on this panel today. Very excited to be here. I'm Anuradha Ramachandra. I'm an investment director at Flourish Ventures, and I lead Flourish's investments in India. Flourish focuses on fintech innovations globally. We are a spin-out from Omidyar Network, which was a global philanthropic investment fund. Our core focus areas in the last few years have been digital credit, financial health solutions for the masses, neo-banking, and more recently, embedded fintech, as well as B2B financial infrastructure as such. Very excited to be here on the panel, insurtech as well. Very excited to be here on the panel with all the other eminent panelists. Thank you.
Thank you, Anuradha. Thank you. Musheer, requesting you to have a quick introduction.
Thank you, Sachin, and thank you to Technoviti and Babu for having us today. I am the founder and MD of Finstep Asia, a venture builder that works with corporates, startups, and governments on startup engagement as well as market expansion in Hong Kong and the rest of Asia. We are focused on building large-scale content with research reports. I'm also a founding board member of the Fintech Association of Hong Kong and on the United Nations ESB and Youth and Women Entrepreneurship Task Force. And lastly, a global ambassador for Invest Tokyo 2021. Thank you.
Great, Musheer. Thank you so much. And just a 10 seconds intro about me. Sachin Seth, based in Mumbai, have been working with Banking Frontier as a partner with them from EY, Ernst & Young, for about 3 years now. And so I take care of digital and fintech for Ernst & Young in India, Middle East, and Africa. And look forward to have a very engaging discussion and questions from audience, right? So with this, let's get started. I think we couldn't have had a better panel than this in terms of geographical spread, in terms of the focus areas, in terms of early stage to growth stage to fintechs to insurtechs. So I think let's make the best use of the time and let's see how we are able to get a lot of insights for ourselves as well as the audience today, right? So David, I'm going to pick you up first because I do see, let's just list off basically, things what you have done in the fintech space. You have written many books. You have been a thought leader in this globally, and you are very much sort of tracking the way things are happening in the fintech space and the investments in the fintech space, right? So somebody who's sitting in UK, what do you think? And be as candid and critical. We Indians are used to criticizing each other quite often, so it's good to also get criticism from our overseas friends also once in a while, right? So what do you think India's fintech space as far as investment is concerned? Is it, how much it is real? Where does it benchmark to the global world? Because when we open the paper or get any daily feeds of the news, I mean, there has been a tremendous amount of focus and the growth happening in the investment, especially I would say post July, August, or September or so. I think we did have a bit of lull between March to September, and for the known reasons, right? But post that, companies have really taken it off, and there are many unicorns have been sort of has come on in the limelight. But do you think, is it enough compared to what's happening globally? And do you see are we punching underweight, or are we punching overweight? What exactly we are doing? So David, over to you, hearing out your points.
Right. There is huge space for growth. It's just the first inning. We are just at the beginning of something very important. First of all, there is huge space for financial technology globally. Globally speaking, there is a certain level of overvaluation, in my humble opinion. Yet, when we are talking about exponential growth, temporary overvaluation may be a minor issue. And I think that India has absolutely great opportunities. In the coming year, India will attract more and more capital flowing into financial technology. And we are facing a total disruption in the financial services industry. And India is actually one of the best positioned countries globally to take advantage of this transition. So I am 95% positive.
Yeah, that's great, David. I think that's a good starting point. So getting a validation about the Indian ecosystem of the fintech and insurtechs from someone like a thought leader like you, I think that's a very good positive note. And I'm sure the fintechs who are, or startups who are basically in the audience and they are listening to it, I'm sure it gives a lot of positive energy to them. So coming to Amitansh, what is, you also are representing overseas investor community into the fintech space, and you have been tracking India also quite aggressively. Whatever David said, beyond that, where do you see, do you want to classify that the areas where India is doing slightly better, or there's a better, I would say, opportunity in India? Is it B2C? Is it B2B? Is it deep tech, enterprise tech, infrastructure? Which area? Maybe just trying to take the discussion a little bit more deeper. And where do you see India differentiates from others? So being in Australia and looking at, let's say, comparing with the other, Asia Pacific market, is India a supply base for the world as far as the fintech innovations are concerned, or is it a domestic story what an investor like you is looking forward to?
Thanks, Sachin. I think it's a very complex and long tailed question, but I think India is exciting. Of course, we have been seeing green shoots of specifically talking about insurance as a sector, right? And insurtech as a subsector. Indian e-commerce companies, Indian digital payments banks, and Indian digital companies are way ahead of the ecosystem than any counterpart in Southeast Asia. That's one strong observation that we have had. I mean, India, you talk about e-commerce companies, they're already like miles ahead in their journey in launching the insurance products. Now they are thinking of creating an entire insurance-led distribution platform on them, right? So of course, the journey has evolved a lot as compared to, let's say, rest of Southeast Asia, which includes Thailand, Vietnam, Malaysia, Philippines. There, the bigger companies are still taking baby steps. They are still figuring out, you can sell insurance with some product being purchased online, and they are still kind of in the initial rounds of doing that. So it's exciting. The second thing is the huge growth opportunity. I mean, a land of 1.37 billion people. Of course, the scale is massive for India. And of course, if you ask about which specific subsector or which specific vertical is poised to grow, it's the embedded finance, which I think Anuradha and both Anand mentioned in their introductions before. So embedded finance is basically when you attach insurance in a default way without letting the customer take a physical or voluntary choice, because let's all agree, insurance is not something which is that exciting or that knowledgeable. That knowledge is not across the people. So trying to create an embedded value, trying to keep a differentiator for the platform offering that, I think that's the way to go. And we have seen specifically at Cover Genius huge success with our partners globally and also in India. We are launching with one of the largest ride hailing companies in India. There are only a few, so I think that's a positive note for us. And also we're talking about large e-commerce companies in India to attach insurance during the customer journey. So that's really exciting.
No, that's great, Amitansh. So I normally, my way of moderation is that I don't have any point of view separately. I just have point of views, nuggets or some small, bites, which I try to, embed. I'll use the word embed. You use the embedded finance. So I'll embed my points within the, point of view what all of you eminent panelists are making. So one thing I'm very impressed with, or I would say fascinated by, that we as consulting companies, obviously I represent EY, and what we have as big fours or big strats or big whatever it is, we always like to differentiate ourselves from each other based on the frameworks what we create, and we don't like to actually use the same terminology. Whereas I am really fascinated and impressed by the way investor community uses the same terminology across the board, and there is so much of uniformity and harmonization. So when we talk about embedded finance, I think everybody in the investor community understands what embedded finance is, what embedded. So basically, these terminologies actually bring all the investors on the same page on the day one, and it's a great thing. I would say I'm saying it in a positive sense. But coming to, let's say, Anand, and asking this question, that do the investors look at these things which are buy now pay later, embedded finance? These are the kind of acronyms, technologies or let's say models are being talked about. Is it so simple to define the investment philosophy that you could just bucket it into the 5 approaches like this? Obviously it is. I guess it's that's what is happening also, and consumers are also having a huge uptake on that. But just want to understand from an investor like you from Nexus Ventures, that does investor look for some kind of catch point, that okay, is it embedded finance, is it a buy now pay later, is it deep tech in this sense, is it an open API place, is it neo banking, and then the investment philosophy gets more or less crystallized based on that itself, let's say up to 50%. Then the balance 50% comes to the which company we are talking about, right? So just wanted to get Anand your view as an investor, because most of the people in the audience who are representing the fintech and insurtech community, it would be a very relevant answer to them to understand that what's the thought process of the investors when they look at a particular kind of business model.
Sure, Sachin. So the short answer from Nexus is that we don't. We are a bottoms-up investor. There are 2 types of investing where you can either be a tops-down or a bottoms-up. In tops-down, you look at the spaces, and the nomenclature doesn't matter. Nomenclature, I think, to your broader point, nomenclature is to make it easy for the larger audience to understand the core need or the core issue that you are trying to solve. That matters. So BNPL, for example, if you take out the payments rail, credit card, for example, always has been a BNPL product only. So how do you differentiate? So there are this nomenclature apart. What we look for is, see, if you think about India, while we are at a very great space, because a lot of the infrastructure that has been built in India is unique. What the government has been able to achieve with the JAM and the NPCI stack and the accounts going in terms of financial inclusion has given us a vantage point to, or a pedestal to move very fast forward. But still, the problem of access, whether it be in credit, whether it be in penetration of insurance, or whether it be it the overall, like the payment infrastructure for the B2B, which Anuradha already touched upon, there are multiple aspects which are still broken. And when we look into investment, we want to understand from the founder that if he has a key or a unique insight which can solve a large enough problem. Now, after that, how you want to categorize or how you want to talk about it, it is the way for you to make your vision clear to the investor. I do not think there is any investor who will just go by that. If you say, hey, I'm doing BNPL and I'm a good guy, just do it. You have to have some unique insight on what you will be able to solve a problem, a deep enough problem with. And that's what we look for.
Great, Anand. No, I think that's quite a good, straightforward sort of clarification in terms of that what fintech shouldn't get carried away by these names and say that okay, just because I'm BNPL, there'll be people sort of available to fund me. There got to be a unique proposition for even BNPL because everything becomes commoditized beyond a point, right? So Musheer, taking your point of view, and you are representing Asia Pacific and especially Hong Kong and Japan, which is a very different market, but a lot of innovation happening there as well, right? So looking at your lens, from your lens, what do you see India, where it is compared to, let's say, market of Hong Kong and Japan? And do you see opportunities for Indian fintechs to come there and participate and help in building the ecosystem? Or do you see Japanese or Hong Kong based, or let's say the larger Asia Pacific fintechs or startups to participate for Indian story? And so whichever way, I mean, you feel the answer lies, or maybe it is somewhere in between. Just wanted to get your point of view as well, so that the audience gets a point of view that what exactly is there in that part of the land.
Sure. No, Sachin, thank you so much for that question. And it's quite pertinent. Over the last few years, we have seen many cases where mainland Chinese tech companies like Alibaba and Tencent and investors like Fosun have looked at the Indian market and invested significantly. Now, I think when you look at Hong Kong and Japan, they're different markets in their own rights, because Japan being a full country of over, close to over 100 million people, while Hong Kong we're talking about 7 million people. Hong Kong is more good for companies who are looking at scaling across Asia Pacific, but more so also for B2B fintechs who are looking to access the institutional space, right? So with a few thousand financial institutions based here in Hong Kong and a few hundred of them having their headquarters for APAC based in Hong Kong, it provides you that ideal market to get a reach across Asia. We as Finstep Asia had also launched an accelerator a year ago to bring B2B Indian fintechs to Southeast Asia and Hong Kong, with the very goal that when you look at Indian fintech companies and insurtech companies, there is a sense of strong technology. There is also a competitiveness that comes from the ability to price well. And lastly, because a lot of Indian fintech B2B entrepreneurs in particular come from technology for BFSI, they are able to identify the problems or needs quite quickly, right? Quite a few would have worked for large tech players and have built a solution. So they're much faster, and the jugaad attitude also helps to a certain extent to find a solution, not just try to say, okay, we can't do this. I think that's one key element from a Hong Kong perspective. While when we look at Japan, I think for insurtech in India, as well as those catering to asset management, it's a pretty interesting space. Japan has one of the highest per capita GDPs for assets under management and has an aging population with a fast declining labor force, right? So artificial intelligence, healthcare, and insurtech are becoming big in focus, and asset management industry is also transforming. So both Hong Kong and Japan are welcoming international startups to come up. And for India, there is a special place for both places where they're looking for it. So I think that's one key element to look at. When we look on the other side, I think the main element that will come from both Hong Kong and Japan is first on the investment side. You do have quite a bit of Japanese investors looking to invest into India, and Hong Kong family offices in particular have been investing in India. That is continuing to grow. On the other side, players like NTT Data, NEC, and others are looking at India as a major place for building the technology, for sourcing technology as well, setting up innovation labs. So there's that element of collaborating with them and helping their global play as such. So, yeah.
Great. No, I think that's Musheer, quite a lot of insights, and I'm sure this would help the fintechs on both sides to basically understand each other better, and also the investors as well. So Anuradha, I'll pick up the point you made. I think the last word you said, or last as part of your introduction, that you are also looking at basically infrastructure plays, financial infrastructure plays, or the kind of neobanks kind of stuff, etc. So just wanted to understand that when do you mean by financial infrastructure plays? What kind of place fund like yours is looking for, and is it that do you generally give preference to the players who are playing financial infrastructure play in a particular geography, let's say only India, or would you be more biased towards the companies who could learn from India, because India is itself a very diverse country, and so much things happening in the insurance and the fintech space, and then also have a capability to and vision to expand beyond, because a lot of geographies, look at Vietnam, Myanmar, Indonesia, or even parts of the Middle East, which is Egypt, or even going up to say Turkey or even Africa. So a lot of actually exchange of innovation has happened. So would you, your investment philosophy would be that when you talk about financial infrastructure, is it limited to a particular geography like India, or you would segregate into different geographies, or would you look at players who could actually start from a geography and then could be a wider player a little bit when they go forward? Yeah.
Sure. Thank you, Sachin. That was a great question. So when we are talking, as a starting point, when we started our investment journey, the more exciting part of any investor pitch is to look at what do products offer to consumers, right? So the value proposition that goes to consumers, it might be end consumers or small businesses or large enterprises, whichever, but the value proposition in the product design actually takes the first step. Now, we have many of those in our portfolio, but consistently what we also saw is that many of them are hindered from scaling or even launching because they need to have the balance sheet support from larger financial institutions in India, given the regulatory framework as well, right? So when and there is a lot already happening in India in terms of like the financial institutions' participations as well. In this context, actually, what is missing is the ability for different kind of products, institutions, technologies to talk to each other. And that's what we're calling as financial infrastructure in that context. It could be payments infrastructure. It could be actually workflow infrastructure in some contexts. It could be actually middleware, which actually helps API-based layers as well. So there are different kind of things which fit into this broad financial services infrastructure, B2B infrastructure that we are talking about. But the fundamental goal that we are looking at is, it is not that everything needs to be done by a startup, right? You build a balance sheet, you do the front end, you do the back end, you put together the infrastructure, you put together the ecosystem. It's just too much to do as well. So somewhere you would start leveraging what exists, and then you think more about providing the end access, and in that context there is infrastructure which can smooth this journey and bring you out much faster, right? So that's the context from which we started this, and we gave it a nice name. That's B2B infrastructure as such. So that's how we and we realize that this is a problem that exists not only in India but most of the emerging markets, and even the developed markets as such. So Pled, of course, brought that home to everybody, but in that it's a universal problem. So we don't have necessarily something which says that we will only look at platforms which can go global. We look at platforms, if there is a large enough market in India, why not just be here, right? But build in such a way that you actually have a deep penetration of the market. So it could be that, or it could be platforms that start out in India, solve for a problem so well, and then expand to neighboring geographies or other geographies as well. It is nice to have that because it's always a fallback effort, fallback for even the founders to look at multiple geographies as such. So that is actually the preference of the founders. Where do you want to focus your energies? Would you build deep in one market? Would you build horizontal across markets? That's fine. But both, I think, have their place in the ecosystem.
Fantastic, Anuradha. No, I think that was wonderful answer, and I think it will enlighten a lot of people who are trying to, get into the building the ecosystem or the pipes or the rails of the whole digital economy. So this leads to another thought in my mind as I'm talking to all of you. And David, the question is going to be to you. That traditionally we saw in India that when we look at the journey of startups in let's say Paytm was launched somewhere in 2011, and I think that was Paytm and Flipkart were the one. Obviously, there were many at that time, but they were the one who have survived, and they are the ones who have really made the difference in the way we shop or the way we transact. or the way we engage with merchants, etc. So, but many of these companies were launched by players or the young people, tech-oriented people, probably in their 20s, in their just 30, right? Not more than that. And then we had series of companies coming like that. Bhavesh Agrawal's company was again like that. And I live in Powai in Mumbai, so it's called like a Powai Valley. So it's like our small miniature version of Silicon Valley, because IIT Bombay is here, and there are a lot of founders around me. They start living in a shared accommodation, and they eventually become big, right? And I've been very envious of them, my neighbors, right? So, but just on the lighter note. But what I was trying to bring the question here is that you being in the European market or looking at the global market, India trend has been that the investors have backed the young people coming with a strong pedigree of good education and willing to take risk. They have idea, they start with something, they get funded. Maybe 1 out of 10 make it big. Maybe the second one makes it half of it. Maybe the third one is just there to be acquired by the number one. And then the 4th to 10 become a serial entrepreneur. They fail, and then even the failure is also rewarded or awarded by, getting a funding for something new, right? Because experience also matters, right? So this is a typical journey, and I've simplified it too much. I know there are a lot of people who do the day job in evaluating all this, and I'm not the right person to really comment, but I thought I'll just simplify this for everyone. What is the trend in the European market or the global market? Are we still, and India also has changed. Now I'm seeing, and especially what Anuradha talked about, if you go into the deep tech, if you go into the infrastructure tech, if you go into the deep B2B tech, you need a lot of knowledge, content, gravitas, which have been built by people, maybe spent 10 years, 15 years, 20 years into the, a technology space or a business space, either in the insurance distribution or in the technology space, building platforms. Because it would not be easy for somebody 3 years, 5 years out of college to really be able to run a B2B company with so much of, and that's my perception. Again, the investors have obviously their point of view. So I know it's a long question, but answer you could give it whichever way you want. Is that what's the trend in the global market? Are we still looking at such kind of companies to be run by the young grads, and they have a passion, energy, enthusiasm, and the idea? Or we are also looking at quite a bit of funding going to the people who actually are looking at it as a second inning of their career, and they are basically coming into the market to build companies. They may, in the 30 years back, they would have called it a small software company. Today, we call them fintech or insurtech or whatever it is. So what's the thought on this?
Right. We are at an inflection point in this sense. So between 2008 and between the COVID crisis, the typical successful founder in financial technology was very young, surprisingly young, and they have achieved tremendous disruption. But again, this is just the first inning. And beyond the COVID crisis, we will see more and more professional, cool-headed, calculated, very smart, very much educated, Harvard Business School type founders. So we are now at this inflection point. The average age of successful founders will grow. And in the last 12 years, young people have been extremely successful, yet this inflection point is coming, it's ahead of us. But please allow me two other remarks, very important ones. When we are talking about age, millennials, Generation Z, it's extremely important from a market point of view, from a consumer's point of view. And let me compare India with three major economies: the United States, China, and the United Kingdom. Did you know that the median age, not average, median age of the population of China happens to be 38 years? The population of the UK happens to be exactly equal, 38. The population of the United States happens to be exactly equal, 38. There is one big difference. The median age in India is 28. And this difference in terms of the consumers, in terms of the market taking up disruptive innovation, embracing hardcore digital disruption, will make a $1 trillion difference for India. This is my first remark. My second remark, behind you is a book on the shelf titled Augmented Finance, written by Brett King. Augmented reality, AR and VR, will be the next paradigm following smartphones. You can think it through, but this will be extremely important, and India is best positioned in this game. I am repeating myself. India is best positioned in this game. I want to mention 3 more words, and then I will pass it on to others. Unicorn, decacorn, hectocorn. In the next 5 years, I am predicting two hectocorns to emerge from India. If I want in financial services in a broad sense, I am not talking about license, I am talking about de facto activity, the nature of the activity. If I want to be even more precise, because my prediction is serious, I want to say 6 or 7 years. So 5, 6, 7 years, 2 hectocorns from India in fintech. Thank you.
Great. No, I think, David, that's really huge. I would say, positivity as well as the encouragement to the Indian ecosystem, because somebody from outside giving that, I think that gives a lot of, people are still chasing the unicorns, but you are talking about people have a long runway to go. And I think that's fantastic. Just coming on the Brett King's book, actually, I meet him every time I'm in Cybos. So I met him in Sydney. He had written this book and he autographed personally for me. And obviously, last Cybos was in Boston. Couldn't visit because of pandemic. So I look forward to have his next book when I meet him. And I think, I agree with you that, there are thought leaders who are predicting quite a bit of things, and some of them are coming true as the time goes by. Absolutely. So coming on this, Amitansh, one more thing we are seeing in India is the off late, which we have started seeing more progressively, is that venture debt. So we all talk about venture capital here, venture investments, venture equity, etc. Off late, venture debt has also taken quite a bit of leap forward. And as we have seen a number of deals happening, there are a number of players focused on venture debt itself. So what do you think? I mean, coming from Australian market, do you see these kind of things are also a trend in your market? And do you think this could also be a potential play for people coming forward? And it's not about only diluting the equity. It's also about, if they are convinced about the business model, if they need working capital, they don't want to dilute their equity. Do you think this model works in your country, let's say Australia? And do you think this country, India, also is ripe for it going forward?
Right. So that's a great question. And I think it's more or so, I feel, relevant for Cover Genius, because we just had our last round as a venture debt round. We didn't do a normal equity. So I think, a couple of factors, right? So of course, one is the dilution factor. The second is the immediate need of capital versus the sort of trust in the business models, which is kind of predicated by the fact that you have already partners who are firing at so and so rate. So the founders are fairly confident to reach a certain ARR over a period of time. I think that's one of the biggest factors. The second thing also is having autonomy while running a company. That's very important in the early stages because founders typically like to carry on their vision of growth, and which may be conflicting from investors' vision of growth. So that's, I think, a second factor, which is, I know there are some investors which are truly for the autonomy of the founders and running as per the founder visions, like kind of hands off, but yet collaborating to get partnerships and relevant businesses sourced or connected for them. So that's one of the factors. But I think, that's a very good vehicle for new startups who are very confident. So for example, I was just reading this article about Zerodha, which has not raised a single dollar till for the next since existence, right? And I think that's just a testament of I think honestly, this has something to do with the valuation game also, right? That how much you raise and how much the valuation you can get. But I think venture debt is asking the founders to be super focused on unit economics, profitability, and the lead time to get to a certain ARR. I think those are the key metrics that startup founders who want venture debt are looking at. And I think that's a great instrument. Yeah, I mean, all the more power to founders if they are confident of the business models, and all the more investment groups who can facilitate the venture debt without the least hasslements. I think it's more than welcome for the industry.
Great. Thank you so much. I think that gives another insight to the people, because a lot of the startups and fintechs have been sort of reading about it, engaging with some players. But I think it's coming up in a big way, and I'm seeing even the big companies, well-funded companies, unicorns, are also going for venture debt for their day-to-day working capital requirements and other things, because they don't want to dilute beyond a point too early, and they just want the capital to basically manage the operations. So it's an interesting, I think, sort of play which is coming in. So Amit, coming back to you with a very grassrooted question. I mean, we all saw that, pandemic brought all kind of emotions to all of us, right? I mean, March, April, May, June, personally, professionally, all of us would have gone through a lot of, and I have spoken to a lot of investors. I've spoken to a lot of customers, fintechs, startups, and there were people, looking at that. I mean, nobody knew what's going to happen, and people knew that it will end, but when it will end, that was the question mark. And I think that was making people a little bit jittery. So, but post that, we also saw that July, August, or maybe September, October onwards, I think people did figure out what's their core space to operate and how do they balance out their business. So during this period, there has been a phenomenal amount of growth in the investments happening. Now, what's your you are in the midst of all this, and Nexus has also done so many things, but I'm not saying you need to specifically talk about those things, but you could even take a generic view. That, do you think that people have taken up, let's say, what we were in last February, and today we are in, or last March, let's say 1st of March last year, and let's say, or 5th of March last year, 5th of March this year, how the sentiment has been? Is it like we had a certain dip March, then we went down, then we came up? Are we at the same level, or there is a buoyancy and there is a uptick in the positivity in the minds of VCs, PEs, and the other investors, to see that no, I think the people who have sustained, survived, bounced back, there are lesser number of people of quality. There are a lot of people who have not been able to survive. So let's focus on the quality and let's go, maybe much more aggressive, because whatever we are seeing in the market, is it the leg they conserved it for the first 6 months because they didn't know where to invest and what's the right way to invest, and they realigned their philosophy, and then they invested to cover up that? Or is it something just starting of the the chain of investments which is happening, because they have seen that this cycle which came and which has also shown them the separation between the men's versus the boys, right? So Amit, I know my questions are getting long, but I'm just trying to create the context so that when your answer comes, it gives a lot more insights to the people in the situation what we have gone through.
Yeah, Anand, Sachin, sorry. Just to take the name. So the couple of things over there, right? Like, first of all, in terms of investment, when March COVID initially started, there was a bit of apprehension, and I would say it stayed there for a couple of months. Obviously, there were lots of doomsday prediction, but what people realized was that COVID has been actually a great force multiplier for digital businesses. If you look at what has happened, is that initial month itself, if you look at the insurance company, they realize that the agents cannot be on ground, and if you're not digitally prepared, then you cannot even collect the premiums, let alone sell new policies. And then same was for, if you look at on the wealth front, if you look at the rise of the Robinhood investors in West versus what has happened in India, the new demat accounts opened has been an all-time high. The people are, if you look at the transactions numbers on UPI and the other payment instruments, the digital payment instruments, they have gone through the roof. I think it crossed 4 billion transactions last month. So overall, it has been a great period of digital adoption. And if you look at investment has sort of followed that. Within the first 2 months itself, it was back to being, I would say, normal. And in the last 6 months, if you say, it's back to being in frenzy. And then the sort of money that has been pumped into the Indian ecosystem because of that, like companies like Grow getting a unicorn valuation, or company like Infra Market, which is getting a unicorn valuation within like 1.5 years of being doing Series A. I would not say it will be like to like comparison even to compare it to the last year. It's a different drivers and different elemental elements which are in play right now.
Okay, understand. So, rather from your point of view, I mean, people do talk about there's a lot of things happening on Startup India. There are a lot of things happening on, government side, regulator side, etc. And you are invested in so many companies. What do you see? Is there a positive environment for startups, fintechs to grow? Is there a support available from all corners, or still they have to go through the challenges what typical any other small and medium sized companies would actually go through? And how does the fintech startups get differentiated compared to a typical MSME company when it comes to the facilitation by the government or facilitation by the ecosystem or the industry bodies? So any thoughts on that?
Sure, that's again like a good question. So in the context of, like governments in, support for the startup ecosystem, most of it is in creating an enabling environment, right? And in general, when you think about ease of doing business, forget whether you're a startup or like a scaled up business, there are certain things which actually like have started coming into the forefront of the speak. For example, how do, like labor laws, or something as simple as like setting up of a company or winding down of a company, right? Like these were very difficult in India earlier, right? Like there are a lot of these kind of things which have come out on the forefront, and there is a conversation happening, and hopefully it will translate into much more efficient action, right? Like there is already action happening, but and as we learn from that, we will kind of like get more into efficient action as such. So that's from a government's perspective. On the regulator's side, like in general, this is not true only of India. In general, regulators follow the market, as in like, innovations happen, disruptions happen, and then regulators sit up and think about what do we need to do in this kind of a context, because it's very difficult for them to foresee what's going to come up as well, right? But having said that, financial services is the most regulated segment, and it is very important from a money flow perspective. It's very important that it be regulated as well, right? So there should, like for the most part, like there is this marriage between technology-based startups partnering with regulated entities, and kind of like, there is a marriage of the two, right? Like you have one which is the speed dial kind of the speed engine, and the other which is the compliance engine, if you will, kind of partnering and building up an ecosystem. Which is great, because then you have the best of both worlds. But somewhere there will also be tensions between the two, and therefore it is good for the regulator to again like build a much more enabling framework as such, right? And in certain contexts. To a large extent, actually, like it has been a benign environment so far. There will always be like some things which happen which create an atmosphere, I guess, like where people are, there is uncertainty, but that uncertainty actually like then leads to kind of like regulatory practices which can kind of hopefully help the system as well. But it is good for like people to consistently and in that context sometimes like the industry bodies kind of work. For instance, the Digital Lenders Association or the Payments Association of India, for startups in certain segments to get together and provide a voice or to what they are really doing, and create clarity also for the investors, for the regulators to understand where people are coming from, right? It is not likely that everybody will be on the same plane, but nevertheless, at least like if you're able to define the environment in which you would want to work, then the regulators tend to kind of like see where it kind of can go. So it is important, and the sandbox creation by many of the regulators. There is an RBI sandbox for banking innovation. There's an IRDAI sandbox for insurance innovation, etc. All those will work. What is also equally important is to see that technology is the ultimate disruptor, right? Like insurance bundled with banking, which is bundled with wealth, kind of is also likely to happen. So then what happens when it becomes a multiple regulatory kind of oversight, right? So somewhere that collaboration of bodies is also required. I'm sure, like, these are not something, I'm not saying anything new, but, hopefully, as we see more and more innovation, it will become more and more important for all the regulators to talk to each other and build a kind of a cohesive ecosystem as such.
Excellent. No, I think that's a need of the hour, and it has been discussed and debated a lot. I think time has come for that to really happen, because fintechs or insurtechs don't really follow the typical traditional path of building a company within a one regulatory ecosystem. It is widespread, and I think because data privacy, other regulations, including cloud hosting. So I mean, it's my day job to keep working with them to figure out a solution, and most of the time that's a bigger problem to solve, and they have to work within those boundaries to really be able to fulfill the regulatory needs. So I think we are almost done on time. So I'll just have a rapid fire round. 2 questions, everyone, 30 seconds to answer. The questions are very simple and need not be that you have to give the point of view of the organization you represent. It could be completely your personal answer. So if you have, let's say, $100 million, right, to invest, or $100 million to take out from the investments which you have made, right, which are the 2 sectors you will choose in India? So choice is yours. You want to either invest or you want to take out. Take out based on what has happened in last 1 year and what's going to happen, and invest again based on what has happened and what you feel positive about. So let me start with Anand. Just a rapid fire round. Just wanted to get the feel of the panel on this too, and you can choose whether you want to put one in the investment and one in the takeout. That's also fine.
I'll put money in B2B payments. I'll take out money from B2C payments.
Okay, great. Good start. So, David, yours?
I put in money into mobile wallet, and I put in money into augmented and virtual reality.
Excellent. Perfect. And Munir, yours?
Sorry, Musheer. Yeah.
Musheer.
I would be looking at, I think, InsurTech. I think definitely insurance is a space in India that has to grow. So I would look to put money there. And the second space is wealth tech. Amitansh mentioned about Zerodha, and we are seeing that growth in India's number of retail investors are still low. So that's another space where there is a sense of profitability. And on InsurTech, we have going to be seeing a big push with LIC coming in, talking about the tender that is on there for payments in the space. So I would put my money in these 2 spaces. I don't think there is necessarily a withdrawal of money needed for the Indian ecosystem right now. It's an upward trend. There may be some profit booking if you want to do some, but overall, I think it's something of more of an investment in than an out trend for the next years.
Great. Amitansh, yours?
Yeah, so I was just gonna say I'm still not in the VC league, so I can say where I will put in my efforts is, of course, reg tech, which Anuradha very beautifully mentioned. So it's like, if you see InsurTech, what we are doing is basically we are serving the regulations on a platter to people and companies and digital houses which want to sell. So in a way, it's making sure that the elephant in the room, which is the regulatory framework, is kind of on a skateboard or something like that. So it moves. It still is an elephant, but it moves slightly faster. So I think that's where I would put in my efforts and see how it grows for the future.
Great. Anuradha, your last word.
Great. My themes for the current year where I would put in money is financial infrastructure and embedded finance.
Okay, great. So you put everything in that. That's great. Or these 2, embedded finance and financial finance, they could be separate, they could be together, but that's where it is. Excellent.
Anuradha, we should chat.
Right.
Of course.
Excellent. So that's good that we have something probably potential happening with the audience and with all of you. So thank you so much. I really enjoyed this conversation, and some goof ups I did in the names. My apologies for that, because I think the screen is showing very small characters, and obviously I'm not good at memorizing everything in a short span of time. But I think it was wonderful discussion, and thank you so much for all of your time. And I'm sure all audience members are going to benefit a lot from this. This will anyway be broadcasted, I guess, as a video as well on the Banking Frontiers websites, etc. So we will have a lot more people viewing it from different places. And with this, thanking everyone and handing it back to host Banking Frontier team. and signing off from our side. Yeah. Any questions from audience, Banking Frontier team? Please let us know. We could have the panelists answer them if the time permits.
Thank you for the wonderful panel. It was amazing.
Thank you, Sachin. Thanks for hosting.
Thank you, everyone.
Thanks so much for having us.